Welcome to this module. In this module, we're going to be discussing the bylaws of your trust. So the bylaws are also the purpose or intent of your trust. So the first thing that you will do is put the name of your trust at the top. So let's dive into Article 1. Article 1, Section 1 talks about the purpose and intent of the trust is to maintain and improve this trust estate so that the trust certificate holders, which are the beneficiaries, may possess the things of life sufficient to provide for health, growth, protection, education, expansion, welfare, preservation, and continuation, and not to just simply arrangement to protect and conserve the property of the beneficiaries. Section 2 is any person may add property to this trust estate by gift, will, exchange, bill of sale, quick claim deeds, or any other types of transfer. Okay, so that could be grandparents, that could be aunts and uncles. Let's say that they don't have anyone to inherit their property, then they can actually gift their property to your trust. Section 3, it is expressly declared that the unincorporated business trust by contract, otherwise known as the Declaration of Irrevocable Trust or Pure Trust, is hereby created and not a living trust. So this is not a living trust, it's not a partnership, it's not a corporation, it's not a company, a joint venture, a limited partnership, or a limited liability company, but a trust defined by the Internal Revenue Code. Okay? Section 4 is if any sentence, paragraph, clause, section, or provision in this trust indenture, bylaws, or minutes of this trust is held to be unenforceable or invalid, it shall not affect any of the remaining provisions. Okay? So if there's any errors, then that error is isolated and it's not going to affect any other articles or sections. All right, Article 2 is the grantor-trustee relationship. Section 1 says that it is against the purpose and intent of the trust for the income of the trust to be taxed to the grantor or the trustee under the grantor-trustee provisions. According to the Internal Revenue Code, no trustee of this trust shall be deemed a grantor of this trust. This is an irrevocable trust. You can only hold one position. Your position is the trustee. You have to appoint someone else to be the grantor of your trust. Section 2, no member of the board shall possess or use the power of administration in a non-fiduciary capacity, nor a power exercisable solely by the trustee to vest the trust assets or income. Okay, so basically with this section, it's saying that the board members are not the fiduciary and they cannot operate in a fiduciary capacity, and they are not they do not hold the power to invest the trust funds. Section 3, the grantor shall retain no power or control of the assets placed in the trust. Okay, so the grantor is the creator and they have no control. Section 4, if it is shown that the grantor-trustee relationship exists, then the trustee shall immediately resign and a new trustee assigned, meaning that the grantor cannot have any power over the trustee. The grantor cannot tell the trustee what to do. Okay, if that relationship exists, then the trustee has to stand down and a new trustee that has no relationship to the grantor has to be appointed. Article 3, Section 1. When the trust is the holder of a copyright, the trustee endorses the above copyright for the authorization or the liability on the commercial instrument or agreement. Section 2. Under no circumstance shall the grantor have any interest in any investments made by the Board of Trustees or the trustee on behalf of the trust. Section 3. The Board of Trustees or Directors may purchase from or sell to the grantor any properties, but always at a fair market value. Section 4. The grantor shall not have the power to reacquire trust property. So once the trust property is given to the trust by the grantor, they cannot take it back. Section 5. Funds accruing in the treasury of the trust, which is basically the trust funds in the bank account, shall constitute the operating funds of the trust. Section 6. The Board of Trustees may also designate any other entities to hold funds or titles to the trust property for any purpose necessary to further intent of the trust. Section 7 is the board shall pay all mortgages, property taxes, assessments, charges, debts, bills, obligations that arise on the behalf of the trust due to maintenance, operation, and administration of the trust estate. Section 8, the board or the trustee shall pay for any rent by the first trustee if this trustee uses the property to conduct the business of the trust. Section 9. The board is further authorized to pay expenses of the trustee, officers, executives, managers, and authorized people who are doing business trust purposes. Article 4. Trust management. Section 1. The trustee shall, at its direction, have power in connection with the management and control of the trust to appoint its trustees or any successor trustees or a qualified non-trustee to the position of a general trust manager or GTM. Section 2. The GTM shall be deemed an independent contractor and not an employee of the trust. Section 3. The GTM shall be compensated by his or her services as required in the minutes. Section 4. The GTM shall have full authority to manage the trust, including but not limited to the routine day-to-day operations. Section 5. The GTM shall have absolute and sole discretionary. Section 5. The GTM shall have absolute and sole discretionary power over this organization of the trust. Section 6. The trustee shall hold all management duties and responsibilities in the event that the office of the GTM is not assigned. Article 5. Trustee powers. Section 1. Section 1. Where is not otherwise permitted by law, the trustee shall have general common law powers over the trust estate, and any citizens may lawfully do in any state or country specifically, but not by way of limitations. So these are the following powers of the trustee. A. To make a loan with interest to the trust for any purpose, and such transaction shall be entered as a first lien against the trust estate, which must be repaid as long as the transaction is recorded in the minutes. B. To appoint secondary trustees and shall increase or decrease the number of trustees as needed to manage the affairs of the trust. C. To appoint the first secretary whose sole duty and power shall be to serve as a protector of the interests of the beneficiaries hereof. D. To compromise or abandon any claims against, out of, in favor of the companies and its trust estate, and the trustee's good faith decision in that regarding shall be binding and conclusive to all parties. E. To manage, invest, and reinvest the trust estates in any parts or any kind of property or ventures which men of prudence, discretion, and intelligence considered for their own accounts. F. To open, maintain, and close bank accounts as necessary to receive and hold and purchase or sell in trust any financial properties. G, to sell at public or private sale for cash, credit, or both, and upon such terms and conditions as the trustee may deem proper. H, to sell, grant, convey, mortgage, option, rent, lease, pledge, all trust estate assets, real, personal, or mixed. I, to borrow on or encumber the trust estate without restrictions and to make loans with or without security. J, to allocate capital gains and or dividends to trust principals as may be deemed appropriate. K, to register company properties in the name of the company of a fictitious